Welcome back. I'm Sonya Moreno, CPA, and today we're talking about a topic that too many business owners put off: estate planning. Now, I know you hear estate planning and you might think it's just about personal wills and trusts for the ultra wealthy, but if you own a business, this conversation's about so much more than that. It's about protecting the company you've poured your heart and soul into and making sure it survives and thrives even when you're no longer at the helm. Because here's the truth: with a clear estate plan, your business could face operational chaos, legal disputes, or even be sold off just to pay taxes. And I promise you, this is not the legacy you want to leave behind. So why estate planning matters for business owners? Employees can focus on passing down personal assets, but as a business owner, you have two legacies to protect: your personal wealth and your company itself. Without a plan, the IRS, probate court, or even family disagreements can decide what your company's future looks like. And here's a staggering fact: over 56% of business owners don't have a formal succession plan. That means that more than half are rolling the dice with everything they've built. So to make things more urgent, the federal estate tax exemption is at a historical high right now, about $13 million per person in 2025, but in 2026, it's set to drop by roughly half. Anything above that amount could be hit with a 40% federal estate tax. What's the translation? Your family might have to sell part of your business just to pay this tax bill. That's why the time to act is now. So succession planning, securing the future of your company. Where do we start? So with the succession plan, that means clearly deciding who will take over your business when you step down if something unexpected happens. You want to ask yourself, who's going to lead your company? Has that person been trained or mentored for that role? And if they can't step in, who's their backup? If your business is family owned, you also need to balance family dynamics with what's best for the business. And if you have business partners, your plan should sync with the buy-sell agreement. More on that in a bit. Bottom line, succession planning is about continuity. So your employees, customers, and family have stability no matter what happens. So let's talk about trust. Protecting your business and avoiding probate. One of the most powerful planning tools in estate planning is going to be the trust. A trust can hold your business ownership, dictate exactly how it's managed, and it allows to pass directly to your chosen beneficiaries. It allows you to skip the long, public, and expensive probate process. For example, a revocable living trust that lets you keep control of the business while you're alive and then seamlessly transfer ownership when you're gone. For larger estates, an irrevocable trust can also help reduce estate taxes and protect assets from creditors. And a special type called an irrevocable life insurance trust can ensure that your family has the cash to pay taxes or debts without having to sell off the business. Trust equal control, privacy, and they give a peace of mind. Buy-sell agreements. This is a must for co-owned businesses. If you have partners, you absolutely need a buy-sell agreement. Think of it as a will, but for your business partnership. It's going to spell out exactly what happens to an owner's share if they die, become disabled, retire, or just want out. Without one, you could suddenly find yourself in business with your partner's spouse, or worse, a stranger who buys their share. A good buy-sell agreement is going to cover the events that trigger a buyout, how the business will be valued, how the purchase will be funded, often through life insurance. It's going to keep the ownership in the right hands, and it's going to avoid those messy disputes. Valuing your business. Know your number. Here's something most business owners don't realize. You can't plan your estate property unless you know what your business is worth. So a valuation is essential you want to use it for your estate tax planning, ensuring that there's fairness between your heirs, and setting that buy-sell agreement terms. You're going to want to get a professional valuation. It also helps you identify ways to increase value before a transition, which means a bigger legacy for your family. Reducing estate and gift taxes. This is where the strategy really pays off. With the high exemption in place until 2026, now is your time to make smart tax moves. Gifting ownership stakes to family not to lock into today's exemption, using annual gift exclusions to transfer wealth gradually, setting up trusts that remove business assets from your taxable estate, and using life insurance to cover future tax bills. The U.S. estate tax is sometimes called a voluntary tax because with the right planning, much of it can be avoided. Liquidity and continuity. This is keeping the business running. Finally, let's talk about something most people overlook: block, liquidity, and operational continuity. Estate taxes are due within 9 months of a death. If all your wealth is tied up in your business, your family might be forced to sell assets quickly just to be able to raise the cash. Life insurance is often the best safety net here. It provides you the funds to cover taxes, debts, and even a few months of operating expenses, so your business can keep going without disruption. Pair that with an emergency leadership plan, and your company will have both the money and the management it needs to weather any storm. Your legacy depends on today's decisions. Estate planning for business owners isn't just about legal documents. It's about protecting the people and the enterprise you care about most. If you take one thing from today's episode, it's this: don't wait. The laws are changing, and the earlier you start, the more options you're gonna have. If you would like help creating this plan tailored to your business and your family, click on the button below to book a call with me. Together, we can make sure your legacy lives on. Thanks for tuning in, and if you found this episode helpful, hit that subscribe button and make sure you share it with fellow business owners. Remember, your company's tomorrow starts with smart decisions you make today.